How are you doing today, guys? I trust you are doing so well. Okay, I want to use this medium to appreciate everyone who has been sending us emails, who has been sending us DMs, who has been sending us questions with respect to what they are not clear about. I really appreciate you guys. Okay, I really appreciate you guys. Okay, so please try as much as possible to send in your questions, to send in your DMs. Okay, send emails to us. You can send me email on bash@readupint.com. Okay, send in your questions. Okay, well, so that we can, if there's anything you are not clear about, if there is a way you want us to be of help to you, kindly do that. Okay, as I often say, whenever whatever you learn until you take action with respect to what you learn, okay, there is no reaction of progress. Okay, so when you learn, you practicalize it, you take action towards it. That is when you learn something for what you've learned, what you've listened to. Okay, so I believe that the last video you must have learned something. Okay, and I believe that definitely you must have shared that video with a lot of people. Okay, please try as much as possible to follow us. If it's your first time of seeing our video, follow us. Okay, like our videos and try as much as possible to share it. Okay, the essence of this video is beyond we marketing ourselves or we educating you. Okay, we are trying to build a community. Okay, a community of educated people with respect to real estate, with respect to wealth, with respect to life. Okay, the what that takes me to what we want to discuss about today. Okay, see, I'm doing a course. I'm doing a course presently, and with that course, I'm presently doing some research with respect to that course. Okay, see, the point is, why are we Africans not growing? Why are we Nigerians not growing? Results, statistics proves that the reason why a lot of us are not, the country is not developing is because of the level of, one, poverty, okay, and two, the level of educated people within the society, within the country. Okay, less miseducation. Okay, non-education leads to poverty. Okay, the first step in order for you to see a poor man, one of the characteristics of a poor man is because it's less informed. There is no education. Okay, and see, we can't keep waiting for government. See, I often tell people, okay, that if we believe that creating public wealth is only government responsibility, it is a foolishness. Okay, it is a foolishness for us to keep thinking that public wealth is only the responsibility of the government. Public wealth creation is the responsibility of government. Okay, businesses. Okay, like Read Up Homes, every other GTS Home, every other businesses out there. Okay, businesses and community. Okay, and that is why we try as much as possible. This video, the reason why we are educating people, why we are doing all these things, is not because it's convenient for us, but it's because we want to build enough public wealth. And what are the ways in which we can do that? Is through awareness. Okay, so we are trying to build a community of people whereby we can come together. Okay, we can come together and we can achieve a lot. We can build public wealth together. See, take note, as I often say, see, whenever you are building your personal wealth, okay, let this be a motivation to you. Whenever you are building your personal wealth, have it at the back of your mind that likewise, as I'm building my personal wealth, I'm building public wealth. How do I mean? For example, if you and I will come together, we crowdfunded, okay, and we are investing in a project. When we are investing in a project, there are a lot of people that are going to work on that project. There are a lot of staff that are going to work in that project. There are a lot of architects, engineers, etc., that are going to work in that project. Especially those of you who are in diaspora. Whenever you are investing in projects in Nigeria, have it at the back of your mind that your brother, your sister, you are creating job opportunity. Okay, you are creating job opportunity for other persons, and that is how we create public wealth. Okay, it's not the responsibility, only the responsibility of the government. It is responsibility of businesses and community. Okay, so please, if you want to join our community or our community of investors, okay, that is why we are doing all this video. Please follow us. Okay, and likewise, click on the link in our bio. Okay, there is a form you need to fill. There is a form whereby you will provide your information to us, telling us that you want to join our community of investors. Okay. As I was saying, I was doing some research over the weekend, okay, with respect to the project that I have at hand. And while I was doing the research, I came across a blog, okay, a United States of American blog. And what I saw on that blog really pushed me. Elon Musk he posted something with respect to shares of Tesla. And everything I was seeing on that comment section was a motivation to me. Okay, in the sense that everybody on that comment section, they were just discussing, I missed Facebook stock. Oh, I missed Facebook shares. Oh, yes, that's why I took advantage of this Tesla share. That's why I'm taking advantage of everything Amazon share and etc. etc. That was what people were having conversation. People were educating themselves on that platform, on that comment section. Okay, what came to my mind that how often have I gone through comment section of blogs in Nigeria, in Africa, that I have people are discussing educative information, things that will change their life like this. When you look at Africa, you will see that a lot of Africans are still first generation wealth creator. Okay, most of us are first generation wealth creator, and that is why you see that there are less companies that are above 50 years, 60 years. Okay, I think the highest I know is First Bank, and which is like around 1802 or 1805. Okay, outside First Bank, outside some other ones, there are no companies that are second generation, third generation wealth. Okay, and if you really want to create if you want to create consistent wealth generation, the beginning of wealth generation is for us to understand how to create wealth. Okay, how to create wealth. Okay, and that is the essence of this video. How do we create wealth? Okay, wealth can be created in two ways. Okay, we have two ways in which wealth can be created. The first one is for you to create multiple streams of income. Okay, and a lot of us don't understand how to create multiple streams of income. I'm still going to do a video with respect to how you can create multiple streams of income. And when you are creating multiple streams of income, you can do it actively, and likewise you can do it passively. That is number one. Number one is, how do I create wealth? How can I create wealth? The number one is, you need to create first. As the first generation wealth creator of your family, of your generation, you need to understand creating wealth through creating multiple streams of income. As I've said, either actively or passively. Number two is, you need to understand how to reinvest in multiple passive wealth creation, okay, passive wealth creation systems. Okay, you need to understand how to reinvest, okay, in multiple wealth creation vehicles or portfolios, and you can do that either actively or likewise passively. When I mean actively means you are the one that is monitoring, that is doing it yourself. Passively means you are involving a coach, you are involving a fund manager, you are involving an investor, banker, okay, etc., etc. That is how you invest, okay, into multiple investment portfolio or vehicle. Okay, and that is why what I want to discuss about today is, what are these various multiple investment vehicles, okay, or portfolios. Okay, as I will explain vehicle to you, vehicle is anything that can convey you, that can take you from one point to the other. That is what vehicle means. Okay, so when we talk about multiple investment vehicle, we are talking about what are the vehicles, what are the portfolios, what are those things that can take you from point A to point B of your investment decision. Okay, that can take you from point A to point B in order to aid your investment decision. Okay, what is my investment decision? I want to become a billionaire. Okay, when we talk about investment vehicle or portfolio, these are things that can move you from your point A of investment to your point B of investment. Those are vehicles. Those are vehicles. And as I often say, see, until you know how to use your money, the only way you can become an investor, You can become a billionaire. You can become a generational wealth creator in your family. Is until you understand how you let your money works for you. How do you use your money? How do you utilize your money so that your money can be working for you? I Bash Olakunle Abiola Oloselu. I'm a real estate investor. I'm a real estate developer. Okay, I'm a coach. I'm a teacher. How do I make my money work for me without my presence there? So that is why we need to discuss on those investment vehicles. As I've explained that when I went to that blog whereby everybody, what the conversation they were having on that blog is how they've invested their money, how their money is working for them through investing in REITs, okay, which is real estate investment trusts. They have invested their money in bonds, okay, how they have invested their money in ETF, how they have invested their money into cryptocurrency, how they have invested their money in stock and shares. Okay, so those investment vehicles are what I'm going to share with you today. Okay, I'm not going to share it to you, share the investment vehicle to you. I will explain what they are to you. So that's why I will use my screen. Okay, I will use my screen in order for me to give you accurate information with respect to what I've jotted down. So these investment vehicles, we have 9 of them. Okay, we have 9 investment vehicles. Is this all? Can you invest in all these 9 investment vehicles? Yes, but when you are investing in all these 9 different, we have more than 9, but I'm going to share 9 that I take advantage of personally. Okay, so can I invest in all these 9? Yes, but before you invest in all those 9, you need to know your risk level, okay, your risk appetite. Okay, you need to know your risk appetite, and you need to know what is best for you with respect to this investment vehicle. I believe you guys are learning something. We have 9 of them, 9 of these investment vehicles that you can take advantage of. Okay, see, there are so many people who have made money through this investment vehicle. There's one lady, during my research, there's something one I came across who invested $180, okay, into their company's share. Okay, this person invested $180. Her name is Grace. You can do a research with respect to her. She invested $180. She left that $180 into that $180 through compounded interest. That $180, when she was retiring, that $180 has accumulated, has become, as dividend was around about $7 million. Okay, so these are some of the things that we are going to discuss on. These different investment vehicles are things that we are going to discuss on. Okay, see, every government, every business, okay, one of the ways in which every community, one of the ways in which they generate wealth is through all these investment vehicles. Okay, you will understand. I will share with you some investment vehicle that has to do with government. There are some that has to do with banks. There are some that has to do with business. Okay, I'm going to explain all these things to you, and you can take advantage of any of them. One, based on your risk appetite, which is your risk level, and two, based on what is best for you at that moment. There are things that are good for you at this moment, are not good for you last week. They are not good for you last year. There are things that are good for you now with respect to your investment decision that will not be good for you next year, that will not be good for you in the next couple of years. Okay, with this explanation that I'm going to give to you guys, you will be able to know what all these investment vehicles stands for. Okay, what are their potential return? Okay, what is the potential return? My return, is it that I want to be making returns every month like salary? I want to be receiving my dividend every week, every month. What kind of investment vehicle do I need to invest in? Do I want to be making my return in like 2 years time, 3 years time, at the end of the year? All these investment vehicle we are going to share it with you based on their potential return. Likewise, we are going to discuss with you based on their risk level, okay? And as I said, we are going to discuss what is best for you with respect to this investment vehicle. Number one, first, let me run through all these investment vehicles so that you can be familiar with them, okay? When I run through all of them, I will now come back and start explaining what they are, okay? Their potential return, okay? And likewise, their risk level, okay? And the one that is best for you, when I explain the best for you, you will be able to decide on your own that, okay, with respect to what Dr. Bash is discussing with me, I think this is the best investment vehicle that is good for me at this very point in time. And then you can take advantage of it. Okay. I'm not a stockbroker. Okay. I'm not a bond broker. Likewise, I'm a real estate investor. Okay. So anything you want to discuss with me, I can give you some brief knowledge with respect to stock and bonds, ETF, etc., mutual funds, but I'm not an investment banker. Okay, with respect to all that, I'm only focused on real estate. So whatever question you want to ask me, it should be based on real estate. That is my area of strength. That is my field of profession. Okay, but if you need someone with respect to stock, I can introduce you to someone. But I don't even like introducing my people to who I use. I want you to go and do your own research, go and search for your own person, and there are different apps that you can take advantage of that you can do all these things online. Okay, so what are these investment vehicles? Number one is stocks. Okay, number two that we are going to discuss on is bonds. Okay, number three on our list is real estate. Okay, real estate, the only thing that is real. Okay, the only thing that is visible. Okay, the only thing that you can hold. Okay, real estate is the only real thing. As I often say, in every state there is a real estate. Okay, in every state there is a real estate. Okay, so number four is mutual funds. Okay, number five on our list is ETF, which is exchange trade funds. Number six on our list is certificate of deposit. They often call it CDS. Okay, number seven in our list is options and derivatives. Okay, options and derivatives. We are going to discuss on what does options and derivative mean, what are the potential returns, what are the risk level, and likewise, who are they best for. Number eight is commodities. Okay, commodities with respect to gold, silver, oil, agricultural product, which is still commodities like agricultural product is still under a section of real estate. Okay, we have agricultural real estate. And number nine is cryptocurrency. Okay, so these are the investment vehicles that we are going to discuss on. And what is the reason why I'm sharing these investment vehicles with you? As one of my belief is, it's not right for you to invest only in one investment, even in real estate. I often advise people, I advise my client, my customer, that when you invest in land banking, try as much as possible to invest in site and servicing. Try as much as possible to invest in rate. Try as much as possible to invest in tenancy, okay, in property that has to do with tenancy, in property that you buy because of appreciation, etc., etc. But most of this property we discuss with you based on your present economy. Okay, so the essence these investment types can play a role in that diversified portfolio depending on your financial goals, risk tolerance, and investment timeline. So number one on our list, if you are ready to start with us, please, why not share this video, like and share this video. Remember, the essence of this video is for us, we are creating a community. Okay, a community of investors, a community of worthy people. If we can try as much as possible to educate ourselves, a lot of the problems we are having in this country is based on followers. Okay, it's based on followership. A lot of African problem is based on followership, and the reason is because a lot of people are not yet educated, especially with respect to their finances, especially with respect to their wealth. So I oblige you, try as much as possible to share this video as many times as you can. Okay, so let's go. What is the first investment vehicle that we are going to discuss on today, which is the stocks. Okay, we are going to discuss on stocks. Okay, stocks, oftentimes people call it shares. Okay, what does stocks mean? What does share mean? I'm not going to give you all those big vocabulary that they use. Stock is this, stock is that. What is stock? What is share? Okay, stock is often called shares too. What is stock? It is you having ownership. Okay, it's you having ownership in a company, you having ownership in a business. You are sharing ownership of a company. You are sharing ownership of a business. You are a partial owner of a company. You are a partial owner of a business. For example, if you have shares or stock, you have stock which Redoc owns. That means you are one of the partial owner of Redoc Homes. Okay, you are one of the owner of Redoc Home. And likewise, if we have a project, we have like Omolola, we have a project that is coming up, and you buy shares with respect to that project, that means you have a share, you are a partial owner of that business or that product. Okay, so what does stock means? That means you are a partial owner of a business, you are a partial owner of a company. Okay, I think that should make your head swell. That should make you feel proud of yourself. Okay, if you have stock or shares with any bank, that means you are a partial owner of that business. And that is why at the end of the year, at the end of the every year, you will realize that at the end of every trading year, you will realize that they will say, okay, this is the chairman of this company. Okay, what does that mean? That means that person has the highest share of that company, of that business, of that bank. Okay, so try as much as possible, even though you can't build your own business, even though you can't build your own company, even though you can't build your own bank, try as much as possible to be a partial owner of different banks. So you can be a partial owner of different banks, be a partial owner of different companies, be a partial owner of different businesses. That is why you see those who are wise, those who are sensitive, whenever they realize that, okay, I think this guy knows what he's doing, especially all these startup. When you notice some startup and you realize that this guy knows what he's doing, you can buy a share with them. Okay, when you buy a share with them, when as the business is progressing, you are making a lot of money even without doing anything. That means your money is working for you. That is what we mean by investment vehicle. That is what we mean by investment portfolio. Okay, so how do you receive your potential return when you invest in the stock, in the share of a business? One is through appreciation, and number two is through dividend. When we talk about appreciation and when we talk about dividend, what do we mean? When we talk about appreciation means now you've invested a amount of money. You've invested 1 million naira, 2 million naira, 3 million naira in the stock, in the share of Redoc Home, in the share of a bank, in the share of a company. How does appreciation occur? Every business do what we call valuation at the end of some certain period of years. Especially it might be when investors want to come in, they want to do the valuation of your business. What is the worth of your business? When they do the valuation of that business, from there they will calculate how much as your stock, your shares has appreciated. Okay, appreciation means increase. Okay, it means how much has my money moved. I've invested 1 million naira, 2 million naira last year. How much? What is the worth of my shares now? What is the worth of my stock now with respect to this appreciation, with respect to the valuation of this business? So one of the ways in which you receive potential return with respect to your investment, with respect to stock and share, is through appreciation, which I said is through price increase. And number two is through dividends. Okay, when company pay out a portion of profits to shareholder. Dividend means that, okay, this is what we've made for this year. Okay, the company now want to share want to give out dividends. They want to share that, okay, this is the profit we've made. We want to share this profit to our investors. Okay, that is what is called dividend. I remember growing up. I remember when where the community I grew up, we have one oil palm company. It's called Okipa Oil Palm or Oil Palm. Okay, Okipa Oil Palm. I remember then they will always bring a letter and with an envelope to my dad. So I always receive it from them. I noticed that these are shares. Okay, it's written on it that this is a share. This is the dividend for that year, for that month. So they will bring it. Oh, when my dad will take it to the bank and go and cash out. So those are ways in which dividends of the shares are being paid. It is the profit of what we've made. This is the profit of this business. This is the profit of this company. This is the profit of this bank. Okay, so we are going to share it with different people, different person, based on the amount of shares they've invested. Okay, now what is the risk level of shares, of stocks? Okay, of shares. See, stocks are considered as high risk because prices can be volatile. Okay, and likewise, they are influenced by trends. Two, company performance and economic factors. Okay, three things that makes your share the risk level for you to decide what is before you decide that, okay, if I'm going to invest in real estate, if I'm going to invest in oil and gas, if I'm going to invest in bank, what are the market trends? What are these are the things you need to study. These are the things you need to look into. What is the market trends of real estate in the past 5 years? What is the market trends of real estate in the past 10 years? What is this saying now? Is this the right time for me to invest? Okay, that's why you see some people, they will say you invest, you buy low and you sell high. Is this the right time for you to invest? Before you can decide that you need to buy low, one of the things that will give you that will give you direction, that will give you compass with respect to if you are supposed to buy now or you need to keep till later is based on one, the market trend. What is the market saying? What is trending? What is in vogue with respect to the market, with respect to this market, this stock, this market I want to invest into? Market means business, means company. Okay, based on this market I want to invest in. Okay, if I want to invest in service apartment now, what is the market trend? What is the number of people that are staying in service apartment? What is the number of people that are staying in hotel, etc., etc.? Likewise, you go into the company performance. Okay, you study the company performance. How are this company be performing? What is the trend? How are they being? How did they move from year 2021 to year 2022? How did they move from year 2022 to 2023? Like that, like that. You view, you study their performance. Okay, when you study their performance, then you can take decision. Likewise, number three on my list is economic factors. Okay, you need to look into the economic factors of that country or of that state. Likewise, we call it policy. What are the factors? What economic factors? What are the things? What decisions are the government making? What decisions are the politicians making? What decision are they making? Which is what decision are they making now that will have influence, that will have disadvantage on what I want to invest on? For example, yesterday was when they announced what's called United States of America election. Okay, based on that information alone, it skyrocketed shares, cryptocurrency, even the value of dollar. These are what we call economic factors. Okay, number four. So, is this one best for you? Can you take decision with respect to this? How do I know if I need to take decision in order for me to buy stock? How do I know if I should take decision if I need to buy stock, bond, etc.? This is where you need to know. See, I wrote here, I said investors looking for growth over a long term and who can handle fluctuation in value are the ones that can invest in stock. Okay, let me read it the way I wrote it. I said investors looking for growth over long term. So that means if you want to invest in stock, you need to have it at the back of your mind that it's going to be long term. Okay, are you patient to invest for a long term? Are you the money you have? Will it, even though you invest it for long term, will it affect you? Will it affect your personal economy? If it's not going to affect your personal economy, then you can invest in stock because it has to be long term. Okay. And likewise, another question you need to ask yourself is, will I be able to handle these fluctuations in value? Okay, because see, nobody, if anyone is telling you that business is always smooth, no. Okay, it's trajectory. Okay, there are times it has its own ups and it has its own down. Okay, that is why you need to believe in the vision of that business. Okay, you need to believe in the value and goals of that business. I believe you've learned something. Have you learned something? You have any question with respect to stocks, with respect to shares? Please don't forget to send me an email on bash@readerint.com. Try as much as possible to like this video. Try as much as possible to share this video. Remember what I told you. I said what we are trying to do, what we are doing is we are trying to build public wealth. Okay, and since we are trying to build public wealth, I said it is a foolishness for you to think that it's only the government that can build public wealth. No, individual businesses, okay, community are the ones that with community, with with businesses and government, these three are the major contributor to contribute to building public wealth. And you sharing this video is telling you that you are one of those who really wants to help us. We want to build public wealth. And the essence of this video is we are doing this video in order to build a community of investors. Okay, try as much as possible to share this video. I believe you've learned something. So that takes us to the number 2 on our list. The number 2 on our list is bonds. Okay, remember I told you that from the beginning that investment vehicle is not only for companies. Okay, investment vehicle has two ways. Okay, it's one is to the advantage of those who are investing, okay, who are sending their money on error, and likewise is for the advantage of the businesses or governments, okay, that you are doing the investment with. Okay, you are investing your money in order for the government, in order for the business to use it to build public wealth and get a return on investment. Use it to do business. When it is government, government might you invest with government in order for government to build infrastructures. So at the end of the day, those infrastructures that are being built is still to your own benefit. If they should do a good road, invest in their bonds, okay? Because number 2 we are going to discuss is majorly with government, okay? When you invest in bonds and they use it to develop their road, is to the benefits, to your own benefit, okay? That means you won't be sending your car to mechanic workshop from time to time, okay? And you will enjoy the comfort of riding on good road, the comfort of having good electricity. So this takes us to our number 2, which is bond. What is bond? What are they? What does bonds mean? Okay, bonds are loans to government or corporations. Okay, bonds are loans to government or corporation. Some of you will ask me, is it possible for me to loan government? Yes. When you invest in bond, okay, you are bonds, you are giving loans to the government or corporation. Okay, so government likewise they need loan instead of them going to instead of them like in Nigeria now you see a lot of Nigerian government, they try as much as possible to get loans from China, from USA, from different countries. Okay, but some government they don't go that way. They get loans from their citizens. Okay, when they get loans from their citizens, it is called bonds. Okay, so bonds are loans to a government or corporation where you receive regular interest payment, okay, and get the principal back at the bonds maturity. We have three different type of bonds. Okay, we have T bonds, we have TBs, and we have T notes. Okay, so with respect to these T bonds, T notes, and TBs, okay, there are some of these that when you invest in them, okay, when you invest in them, it is you only receive your interest at the end of a year. Okay, and there are some who when you invest on them, they are between 2 to 5 years. Okay, your investment can be between 2 to 5 years, and when your investment is within that 2 to 5 years, you will receive your dividends. Okay, you receive your dividend, okay, every month. And likewise, there is one that has to do between 20 to 30 years. Okay, okay, so we have different type of bonds. As I've said, we have T bonds, T-bills, and T-notes. Okay, so what are the potential return of these bonds? Okay, remember I told you bond is loan to the government or corporation. Okay, what are the different potential returns for return of this bond? Okay, generally lower than return than stocks. Their returns are not as high as stock. Okay, but bonds offer a predictable income streams. Okay, especially with higher grade bonds. Okay, higher grade bonds, that's T bonds. I think T bond is the highest. I don't want to pass that information. Okay, I know we have T bonds, T notes, and T bills. Okay, so this kind of investment, you get your return either monthly or yearly, depending on the type of bond you've invested on. Okay, they have lower return compared to stock. Okay, but you can predict your income. You can know that, okay, this is what this government is going to pay me this month. This is what the government is going to pay me at the end of the year. Okay, so especially and they have higher grade. We have higher grade bonds, as I've said. Okay, so what are the risk level? Bonds are less risky, okay, than stocks, but come with interest rate risk. Okay, bond prices fall when interest rate rises. Okay, listen to that. Bond prices fall when interest rate rises. Okay, and its issuer can't make payment when, okay, which is credit risk. We call it credit risk. Okay, so when we talk about bonds, okay, it is one, the interest rate. You can't compare the interest rate with respect to, you can't compare it to stock. Okay, and likewise bond prices fall when interest rate rises. Okay, what is the essence of interest rate? Interest rate, the why when interest rate is low, okay, it gives us ability for us to take advantage. Interest, the essence of low interest rate is it creates activities. Okay, for example, if the interest rate is low, okay, we can easily source for money, and when we source for money, we can easily, it creates activities in the sense that, okay, this project activity, in the sense that this project, because interest rate is low, I can invest, I can easily get loan, and I can invest it in this project. Okay, so there's activity here, activity in the sense that workers are there, staffs are there, people are working on that site. Okay, so that is when interest low. That is the benefit of interest when interest rate is low. Okay, so as I've said, bond prices fall when interest rate rises. Okay, who are the people that bonds are best for? Investors seeking income. Okay, you, just like you are receiving salary, you want to be receiving another source of income. Okay, then you can invest in bond. A lot of real estate companies are doing that. That is rates. Okay, I will discuss about that later. Okay, investors seeking for income and more stability in their portfolio or investment vehicle, especially during uncertain markets. Okay, so if you are looking for income, then go ahead and invest your money in bonds. Number three on our list is where I with my area of specialization, which is real estate. Okay, real estate. Okay, real estate investment involve purchasing physical properties. That's why I said is the only real thing. It involves you purchasing physical properties. What are these physical properties? Residential apartments, residential homes, okay, commercial properties, okay, and likewise land, okay, and likewise rates, okay, or investing in rates. Okay, rate is when when investors come together, we put funds together for a large scale, okay, for a large scale real estate project. When we come together, as I've said, we have different kind of rates, or we have a different platform in which we are sourcing for funds. Okay, you can click on our bio, go through our bio. We have real estate crowdfunding, and we have real estate investment partnership. Do you think you want to partner with us? Do you think you see us like people who has future? We have vision. We have what is driving us. We have what we want to accomplish. You believe in us. Okay, you've been watching our videos and you think that, okay, these people are people that I believe I can partner with. Why not click on the link in our bio and submit your information to us? Or you can call me on 0814 028 5704, or you send me an email on bash@reductint.com. Okay, let's come together. I have a lot of projects that are on my table, and I'm looking for investors. I'm looking for people who we can sit down together, partners who we can sit down together, and we can achieve this vision together. Remember what I told you. Whenever you are investing and whenever you are building your personal wealth, remember that you are building public wealth likewise. Okay, so join us, collaborate with us, send us an email. Okay, and likewise, try if you can't, if you think you don't have enough money in order for you to partner with us or to platform with us, the best thing you can do for us is to share this video. Share this video with that person that you know that, okay, this person has these funds, he has this money, and it can be of immense benefit to us. Why not share this money? And when you share this video, and when you share this video, let us know. Or you have someone that you believe that, okay, this person can partner with you, this person can platform with you. Why not send us an email? Send us an email on bash@reductint.com, or send me a text message on 0814 028 5704, that you have someone that you believe can partner with us, that you have someone who you believe can join our community, that you have someone who you believe we can put money together in order for us to achieve our projects. Okay, so please send me an email with respect to that. So as I was saying, real estate investment is purchasing physical properties, okay, like residential, commercial, or land, or investing in REIT, which is real estate investment trust. Okay, what is the potential return of real estate? Potential return of real estate comes in different ways. Okay, real estate returns on real estate is still income through what? Rental income, property, and likewise property appreciation. Okay, rental income in the sense that when you have a property, you have an Airbnb. Okay, you might be receiving income every week. Okay, whereby people, Airbnb means people vacation homes. Okay, whereby people, is another form of hotel. Okay, so there's tendency for you to be receiving your money, your dividend, your income every month or weekly, depending on the transaction, depending on if you are handling it yourself. You can be receiving your money every week, every month. If you are partnering with someone, then you both can decide, you can come to a decision with respect to, okay, this is the time I will be sending your money to you. And likewise, property appreciation. That property that you are making money from, you are collecting rent from, that property likewise is still appreciating. That land that you bought for 20 million naira, that land is appreciating. Okay, at the end of the day, I know a couple of number of people who bought land at the rate of 5 million naira. Now those land are in 200 and millions of naira. I have people who bought land 1.5 million naira. Today, those land are going for like 10 million, 15 million naira. Okay, that is based on capital appreciation. What is the risk level of real estate? Okay, physical property investment carry risks such as market downturns. Okay, property damage and vacancies. Okay, those are the things you can experience. You can experience with respect to the risk you can see with respect to your real estate property downtime. Sorry, market downturn. There are times that the market is not that juicy. It's true, it's real. Don't let anybody lie to you. It happens. Okay. Likewise, property damage. All those ones are still things that are under your control. Vacancies, likewise, those things are still things that are under your control. So real estate risk is minimum. It's minimum. It's not because I'm there, but it is minimum. Because one, market downturn is something you can control. You can involve force appreciation. You can involve force market upturn. Okay, property damage. There are ways. That's why you see, if you are giving out your property with respect to rent, that is why you receive things like caution fee. Okay, and vacancy. You, depending on how you do your property, when you make your property beautiful, you look it so attractive, then it won't be vacant. That is why I said the risk is minimal. And when it comes to rate, it carries fewer direct risk. And okay, but the beauty of rate is it's easy to buy and very easy to sell. Okay, when you are buying rates, okay, it's very easy to buy and very easy to sell. Who are these investors for? Okay, these investors are good for those who are looking for tangible assets. Okay, you want a tangible asset, you want to be seeing your asset, you want to be seeing it, you want to feel it. Okay, those who want to invest in tangible assets, okay, those who want to generate money through income, to generate income through rents, okay, and those who want to diversify outside the traditional stocks and bonds, okay, traditional stock, bonds, and mutual fund. If you want to diversify into all those outside all those things, then real estate is the deal. Okay, real estate is the deal. As I often say, every other investment, every other thing that you invest on, every money you make from every other sector, they are still coming back to real estate, because there is no any other sector, okay, that doesn't have a real estate in them. Think of it. There is no sector, no business sector, no industrial sector, no political sector that you think of that doesn't have an element of real estate in it. That's why I said in every state there is a real estate. Okay. And as I often say, one of my quotes is, until you understand the similarity between your mind and your land, then you won't understand what real estate means. There is nothing you put on your mind that doesn't appreciate. Likewise, there's nothing you put on your land that doesn't appreciate. Every mineral resources, they are found in real estate. That's to tell you how the power of real estate, just like the power of your mind. Don't let me take you too much. Don't let me take your time too much. Why not share this video once again? If you are learning something and you want someone around you, you know someone that needs to learn, that needs to hear this voice, that needs to know what you are discussing about, try as much as possible to share this video. Okay, as I've said, we have different investment options. Click on the link in our bio. Okay, we are looking for partners, we are looking for investors that we can collaborate with, you can partner with, in order for us to achieve a lot of our projects together. Number 4 on my list is mutual funds. Okay, if you have invested in shares, stocks, if you are invested in bonds, if you are invested in real estate, then can I invest in mutual funds? Yes, you can. You can invest in mutual funds. Likewise, if you have not invested in stocks, if you are not invested in bonds, if you are not invested in real estate, but you are comfortable to mutual funds, or you have someone that you trust that is into mutual funds, or but because you understand mutual funds better, what are the things you need to look into before you take those decisions? Are things that I'm going to discuss with you right now. Mutual funds are when you pull money, okay, from many investors, okay, to invest in a diversified portfolio, okay, of stocks, bonds, real estate, and other security managed by a professional. Okay, what do I mean? Mutual funds are people whereby they they bring pools of money from different investors. Okay, when they bring this pool of money from different investors, this money that is being gathered from different investors, they now reinvest that money into stocks, okay, into bonds, and into real estate. So when we are talking about mutual funds, have it at the back of your mind that if you invest in mutual fund, there is still tendency that the money that you invested in mutual fund is still going to be invested in stocks. It's still going to be invested in bonds, or likely real estate, or other investment vehicles. Okay, but this time around is being managed by a professional. Okay, so potential for return. What are the potential returns? Returns vary based on the type of funds, such as equity funds, okay, which has higher return but more risky, okay, and bond funds, okay, which has lower return but more stability. Remember when I discussed bond with you, I said it's very stable, okay, but the returns are not high, and that is what I'm still re-emphasizing here. That whenever you invest in mutual funds. Your returns are coming either through equity funds or through bond funds. Okay, equity funds, when you are getting your return with respect to equity fund, is very high but very risky. But when you are getting your funds through bond funds, it is lower but more stable. Okay, so the choice is yours. Whenever you are taking your decision with respect to, okay, I want to invest in mutual funds, okay, you are talking to your professional. One thing you need to put into consideration is, how do you want your return? Is it through equity funds or through bond funds? The choice is yours to make. And that is the essence of me sharing this video with you, so that it can help you. You can have a pre-knowledge, a pre-information, okay, of what you are getting yourself involved in. What is the risk level of mutual funds? Okay, mutual funds reduce individual stocks risk through diversification, but they still fluctuate with the market. Remember that I said that when you invest in mutual fund, it's being managed by a professional. Okay, and what is the benefit? This professional is diversifying your money in other investment vehicles like real estate, like bond and stocks, okay, and other security, other investment vehicle like commodities. Okay, so the risk is diversified. Okay, your risk is not based on you are investing on stocks or you are investing on real estate only. Okay, with this, your risk is diversified. Okay, so who are the people that this is best for? Number one, without missing word, you should know that this is best for those who love diversification, those who don't love to put their eggs in one basket. Invest in mutual funds. Okay, so the investors, they task a broad market exposure. Broad market in the essence that, as I told you, the money that is being put together by the professional is likely to be invested in stocks, it's likely to be invested in bonds, and it's likely to be invested in bond, in stock, bonds, and real estate. Likewise, commodity. Okay. Likewise, another beautiful thing is it is being handled by professional management. Okay. Okay. So it's better without picking individual stock, in the sense that it's better when you invest in mutual funds, okay, because it's being managed by a professional. It's better than when you go and just pick one stock. Okay, if you don't have the knowledge, if you don't have the experience on how to invest in all these things, it's better you invest in mutual funds or real estate. Okay, so number 5 for my list is exchange traded funds, ETF. What they who are the people? What does ETF mean? Okay, ETFs, as I've said here, is similar to mutual funds. Okay, in that they all diversify means of assets. Okay, they all diversify means of assets. Okay, however, ETFs trade on exchange like individual stocks. Okay, ETF, they are diversified, but their own way of investment is they invest on individual stocks. Okay, they invest on individual stocks. Okay, and what are the potential for return? ETFs can offer similar returns similar to mutual funds, but often at a lower cost. Okay, they can track specific indices. For example, this S&P 500, okay, sectors or commodities. Okay, those are how those are the ways in which you get your return. What are the risk level of ETF? The risk level is comparable to mutual funds, as I've said, because it's been diversified. Okay, and it depends on the specific ETF you are investing in. Okay, some may track safer assets while others are high risk. It all depends on who is managing your ETF. Okay, who are the people that ETF are best for? Investors who want diversifications, like in the case of mutual funds too. Investors who want diversification, who want lower fees, okay, and who wants to have the ability to trade like stocks, who want to trade on like stocks. Okay, number 6 on our list is certificate of deposit. What is certificate of deposit? Okay, certificate of deposit are time deposits offered by bank that pay a fixed interest rate in exchange for keeping your money in the bank for a set period of time. One other way that I can use to explain certificate of deposit to you is fixed deposit. What we call fixed deposit. Fixed deposit means when you bring you have bulk amount of money, okay, and this money you want to use it for something. You want to use it to pay your rent. You want to use it to do a project, but you are not ready now, or you want to keep the money for like 2 3 years, okay, so that by the end of 3 years you can use it to do whatever you want to do. That is what certificate of deposit means. You carry that money and you take it to the bank, okay, and you save it with the bank, okay. So CDS is when you save, you have a fixed money, okay, you have a fixed amount of money in the bank, receive fixed interest for a particular period of time. But one of the things that I've realized that a lot of people make with respect to fixed interest is they don't know how to negotiate their interest rate, okay, and that is where the beauty of certificate of deposit is. Fixed deposit, that is where the beauty is, ability for you to negotiate, okay. If you know how to negotiate, okay, it has its own benefit too, okay. What are the potential returns? Lower returns compared to real estate, compared to stocks, compared to bonds, but they are predictable and guaranteed by a bank. That is only the potential way of return. It's based on interest at the end of the day. Okay, you deposit 10 million for so amount of period. This is the amount you are going to have, okay. So what is the risk level? Very low risk, no risk, okay, especially if insured. If it is insured, there are some that needs to be insured, there are some that are insured depending on the amount of money. So there's no risk, okay, as and they offer guaranteed returns. Who are the people that certificate of deposit or fixed deposit are good for? Investor prioritizing capital preservation. As I've said, you have money, you want to save the money for a period of time, so that you can use it to do whatever project you want to do, or you want to use it to pay your house rent. Those of you who are paying house rent, or you have a project that you want to build out in the village in the next 5 years. So you have the money now, but you can't do it now based on one or two things, because the money is not complete. You can put it in fixed deposit or certificate of deposit, okay. It has over high returns and those with short time saving goals. Those are the people that fixed deposit, certificate of deposit are good for. One, those who prioritize capital preservation, okay, over high returns. They prefer, let this money be here. I don't want high return, but let this money be here, okay. And likewise, those who want to save it for a short time, okay, due to saving. The essence of them saving it for short time is so that they can, just for saving goals, okay. Number 7 on our list is options and derivatives. I believe you guys are learning something. Are you guys learning something? If you are learning something, try as much as possible to share this video. Remember what I told you. The essence of us doing this educative video is in order for us to build a community of like-minded people, people who are going in the same direction, in order for us to educate people. Remember, they always say that Africa is the capital of poverty, okay. The essence of this video is on, in order for us to eradicate poverty, in order for us to eradicate that bad mindset that is stopping you from investment. I often say, people, investment, you don't invest, it's not because you don't have money. You don't invest because you don't understand what investment is. Investment vehicles are when your money is working for you, okay. Until you are making money when you are sleeping, you've not started making money. That is the essence of investment vehicle. So number 7 on our list, after you share this video to as much as possible, as many times as you can, okay, with that person that you know can partner with us. Share our videos with them, send our links to them, okay, and may God bless you. So number 7 on our list is options and derivatives, okay. What are options and derivatives? Options and derivatives, like options, derive their value from underlying assets such as stock or index. Options give the right but not the obligation to buy or sell at a specific price before a set date. What does that mean? Let me repeat myself, okay. Options are and derivatives are derived value from underlying asset, okay, such as stock or index, okay. Options give the right but not the obligation to buy or sell at a specific price before a set date. This is when you buy stocks and index before a set date, okay. There are ways in which you make money through that, okay. What are the potential return of options and derivatives. Okay, high potential for profit, but also substantial risk of loss. Derivatives are used for speculative purposes or hedge other investment. That's why I say you buy it before this time. It's because you are speculating the market. You know who speculators are? People are just they don't do much informed details. They are just trying to see what is the market saying, how is the market flowing. Those are the people that invest their money in options and derivatives. And I said it is very high risk, okay, especially for those without experience. Losses can be significant as options can expire worthless. Okay, who are the people that invest for? Experienced investors who understand market movement and are comfortable with high risk strategies. If you understand the market, that okay, this thing that I'm going to speculate, okay, if my speculation is going to be like this, okay, like all these lottery players, okay, I'm speculating that this market will flow this way. Okay, so that's why they said it's for those who love high risk. They are high risk people, but high risk strategies people. Okay, so number 8 on our list is commodities. What do we call commodities? As I said earlier, commodities include physical goods like gold, silver, oil, and agricultural products like cocoa, okay, palm oil, okay, cola nuts, okay, etc., etc. You can invest through future contracts or commodity focused ETFs, okay. Potential for returns for commodities is can offer high return but volatile and influenced by global supply and demand factor. When it comes to commodity, one of the major way in which you get your return is one of the things you need to put into account is demand and supply. If the demand is low, okay, the supply will be high, and if the supply is low, the demand will be high. Okay, so these are the things you need to put into consideration when you are dealing with commodities. Okay, what is the direction of the demand? That will give you the direction of what the supply is saying. Okay, what is the direction of the supply? If there is scarcity, you can know that okay, if there's scarcity, you can make a lot of money from the market. Okay, so what you need to do is with respect to commodities, you need to understand the law of supply and demand. Okay, what is the risk level? I, given their sensitivity to economic conditions, weather and geopolitical events. For example, you have commodity, you are selling commodity, you are into commodity trading, and your product is coming from Ukraine, it's coming from Russia. Look at what oil issue is causing with respect to the world now because of the Russia war is affecting a lot of oil business. Okay, so these are the things you need to put into consideration when you are trading with respect to commodity. When you are using commodity as your investment vehicle, okay, you need to one look at the demand and supply. You need to be very conscious of the economic condition. You need to be very conscious of the weather. You need to be conscious of the geopolitical event. Just as I've just explained with respect to Ukraine and Russia war, Israel and Palestine wars. Okay, those are the things you put into consideration when you want to use commodity as your investment vehicle. Who are they best for? Risk tolerant. Okay, so who are the people that commodity good for? Investor looking to hedge against inflation. Okay, if you want to hedge against inflation, okay, it's one good way. Just like real estate is good, it's one of the best way in which you can hedge against inflation. Commodities too are best way in which you can hedge against inflation. Likewise, if you are seeking diversification outside the traditional financial market, outside stock, bond, ETF, mutual funds, these are ways in which you can hedge against inflation. Sorry, these are ways in which you can invest, okay, other from all those traditional financial market. I've, I've shared a story on this platform of Ronald Red, okay, who invested all his money in bond in stocks and savings, okay, and because of that, at the end of the day, he lose his money because he didn't diversify into other investment vehicles. Okay, so if you want to diversify, you want to go against traditional financial market of stocks and bonds, then you can look into commodity and you won't regret. If you master how to invest based on supply and demand, you won't regret investing in commodity. Finally, on my list is cryptocurrency. Cryptocurrency. What is cryptocurrency? A lot of you are very familiar with cryptocurrency. What is cryptocurrency? Okay, this is digital or virtual currency that uses cryptography for security. Example include Bitcoins, Ethereum, and many others. Okay, they are digital virtual currency, okay, that uses cryptography for security. Presently, now that Trump has won his election, what is the value of cryptocurrency? Okay, all these things, they fluctuate, they affect the value and the profit you make for cryptocurrency. So what is the potential return? How do you get your potential return with respect to cryptocurrency? Cryptocurrency can offer explosive returns, very explosive. Okay, you can invest some dollars. I think presently now, one of the person that I'm following on with respect to Bitcoin, I think they said Bitcoin is around $71,000 for one Bitcoin now. And he said now, if you should buy now, by the time Trump wins, after 3-4 days, it's going to $78,000 for one Bitcoin. That's huge amount of money. Okay, in within a short period of time. Okay, that is how crypto are always like. Okay, and when they want to fall, they fall drastically. So you need to be very sensitive with respect to who you are getting your information from. Okay, there are different ways in which you can get information before the information you use in doing your analysis. Okay, I'm not in crypto class and I won't be explaining that. Okay, so what are the potential for return? Cryptocurrency can offer explosive returns, as I've said, but highly volatile and speculative. Okay, what is the risk level? Extremely high risk. Extremely high risk. The way I have a couple of friends who I regret, who are telling me that they can never put their money in cryptocurrency. I'm not discouraging you. It might be your own lane. Okay, but based on the high risk, because they've realized that no, this is not good for me. Okay, this is not good for me. Okay, so extremely high risk given the volatility and lack of regulation, okay, and security concerns. Okay, one, extremely high risk, volatility, lack of regulation, and security concerns. Who are cryptocurrency best for? Risk tolerant investors, people who tolerate risk, they don't care, looking to diversify into digital assets, or those interested in emerging financial technology. Those are the people who, if you are in this class, if you are in this group of people, you are in this class, then you can go ahead. Let me repeat myself. Those who are the people that crypto are good for: risk tolerant investors looking to diversify into digital assets, or depending on financial goals. Okay, into digital assets, or those interested in emerging financial technology. If you are all these fintech people, fintech guys who love financial technology, okay, those are the people that can invest in cryptocurrency. I believe you've learned something. I believe you learned something. If you've learned something, okay, if you've learned something, then go ahead and share this video. Try as much as possible to share this video so that other people can learn from this video. And I've said, if you know someone, or someone someone that can partner with us, that can invest with us, please do oblige, do try as much as possible to share our contact with that person. Okay, try, go through this video and take your decision. Remember, I told you, the only way in which you can become wealthy is when you let your money work for you. Okay, all these lists are based on letting your money work for you. Thank you until you hear from me again. My name remains Dr. Bash Olakunle Abiola Oloshere, the CEO of Real Estate Doctors Enterprise Limited, Redoc Home. Okay, my responsibility is to invest, is to educate your mind so that you can invest in real estate. Bye.